Even yesterday I was speaking to a referral partner who was telling me a client only owes $125,000 on their home and they can't afford the repayments. Okay? We can't wait for things to get to a crisis level. There are solutions, and this is one of them. And I'm going to talk to you about secure asset fractional equity. This is the game changer in property, and it's very unique in the way that we do it because no one's doing it like we do. What it means is people can buy a 5% stake in a property, which means they'll get 5% of the returns and 5% of the costs. And the wonderful thing about that is it's an NDIS property, so it's positively geared. You can only have a maximum of 7 investors in this property space because 65% of it is owned by our partnering company that's made it all possible. So Supervest will own 65%, they've got the financial backing, it's secure, it's locked in, and then 35% can be made up of up to 7 investors. So people can choose 10, 20, 35% if they want, or if all they've got is that 5%, they can get in with as low as now $45,000. So we now have a house with 1 tenant, or a dual key with 2, and that will start at around $65,000. So that's a summary. So it gives people who have never ever been able to buy property or are struggling to get finance, because how difficult are banks making it right now? It's ridiculous. So we're now enabling people to access the equity of their home or use their extra funds that might be sitting there dormant in their super fund to get in on a property that really will work for them. So it suits young investors who have a small cash deposit but can't quite get in there to buy full property. Investors who can't get approval, like I said, from a bank. They don't have the serviceability, but they've got the equity. Or they've got the serviceability, they've got high income, they just haven't got enough to get started. You've got SMSF investors who've got some cash in their super. They can use that to diversify. So great, have the stocks and shares covered. But now, if you don't want to invest whole hog in one property, you can just use a fraction of your income and your money there to use. Conservative investors who are fearful of putting all their eggs in one basket can now diversify. We've got one client, they've got $1 million to play with, so instead of putting it in one property, they're going to buy 3 stakes across 3 different properties, so 30% in each. That gives them diversification of location as well as the style of property. And being in DIS, you know, we're talking returns of up to 12%, so it's something significant in today's market. So for as little as $60,000 for a dual key or $45,000 for a house and land, you can be a shareholder of an NDIS property that's positively geared and will get you returns of between 8 to 12%. The returns are paid monthly, and the beautiful thing about it is you still get the benefit of all the capital growth benefits. You're on title. So you don't have to be in this massive tower. I don't know if you've been approached by these super companies that say be one of hundreds or thousands of investors to build a tower. You're only 1 in 7. You're on title. You can sell when you want to sell, and there's no obligation. It's your own little piece of the pie to work for you and achieve your goal. So the next page, we're talking about what am I investing in? As I said, it's an NDIS SDA property, and as I mentioned earlier, we do the full end-to-end service. That in itself is gold. It's why I work for this company. No other company can say that. It's what makes us unique. Not only do we design these builds and build them with our quality builders, but we also find the tenants and manage the property. We have a 95% occupancy rate across all our dwellings. That's incredible for a regular property portfolio, never mind NDIS, which is so much harder to secure tenants. We've got a reputation out there where people are now ringing us saying, do you have a property here? And because of our expertise in managing the tenants and knowing what they want, that's fed through into the design, making our houses a standout compared to all the others that you'll see. So if you hear nonsense like, oh, they're vacant, no one's filling it up, there's an overwhelm, an oversupply, absolute garbage. Not if it's a property they really want. There's huge demand in the robust space we focus on, and people get to choose where they live in. So if it's empty, there's a reason. Alrighty. So we still focus on capital growth. So the areas we're building, ironically, are massive growth locations in Queensland, in Western Australia, which is still rising, and also in new parts of New South Wales, regional parts of New South Wales, where we've seen the capital growth happening over the last 12 months. People who've invested have already made $200,000 on their property in New South Wales. So some of our NDIS solutions have even higher capital growth, whereas others have higher rental income. So we really can find the right one to suit the client's needs. So I've given you some solutions and some options here. So if you have a look at this page, you'll find that Safe Property, this is one that's sold out instantly. We got all investors. 1.2 million for a dual key. A dual key means it's one big dwelling, but you've got a dividing wall, a larger dwelling of 3-bedroom, 2-bath. The other side, 2-bedroom, 1-bath. Both have parking and they have a garage each. $60,000 gives them access to a 5% share where they'll get a return of 12.79%. Now, an important thing about the returns is they go up automatically by CPI every year. You don't have to negotiate. They're not going anywhere. These tenants do not like change. Once they're in, they tend to stay. So they're there for the long term. That's the one in WA. We've got lots more in WA. In Caboolture, Queensland, we're getting phone calls from companies saying, have you got properties in Caboolture? There it is, $72,000. You're going to get the benefits of growth in Queensland and in WA, as well as positively geared income. This one's offering a return of 9.9%. By the time it's built, it'll get 10% at least. So the whole property is 1.4, but his share is only $72,000. So I've got a client who cannot get a loan approved. They're going to use their income instead that they've got in a term deposit to buy 2 shares of this property. I've got another client who has never been able to invest in property ever. He's 48, single, earns around $80,000. That's all he's got. He's setting up an SMSF. It's all set up now. And he's going to buy finally a share of a property, and he's so happy. And because he's buying one now, the money that gets reinvested back into his super will enable him to buy more of these over the next 10 years, a total of 4. So where he couldn't own a property outright, he now has a stake in property as well to his portfolio. So he's really excited. On this page, we've got the numbers. So where we're also unique is we focus on numbers. It's not about emotion. You don't have to like it. The market needs to like it, and the numbers need to ring true. So with this example, this is a purchase in an SMSF for $1.2 million investment. You're putting in your cash. Sorry, the property is 1.2. You're putting in your cash investment of $60,000. So when you look at the whole property, if you were to buy it outright, the return is $1,800 per week net. All right? Now, you work out a 5% share of that, you're getting $90 back in your pocket every week. And you might think it's small fry. I've got other people saying that's amazing. There's no negative gearing here. That can actually contribute to paying off your mortgage, paying groceries, whatever it is you need. Underneath that, you'll see a bit of a schedule we've created that shows the capital growth and the income attained with just a 5% stake. So the purchase price is $1.2 million. The capital growth using an average, which is an industry average of 7% per year, will give you $60,000 back in your pocket in capital growth. The 5-year growth is $84,000, and 5% of that is $37,000. In 10 years, you'll make $119,000 on this property for 5%. It's pretty crazy. And then you'll get income of $75,500. Now, if we compare that to what you're going to get in the bank with a return of, if you're lucky, 5%, 4.5%, you're only going to get some $25,000 in a term deposit over 5 years versus a total of, is it here? Versus a total of $122,600. So you work out the math and what works there. It's a real winning solution. Now, I've already told you about some examples where that's happening, but ultimately, this is a game changer. People who are struggling right now, and there's a lot of people struggling, a lot of people are selling their houses. We're seeing houses on the market that haven't been on the market for years because they cannot afford their repayments with these interest rates. People need to find a solution that's going to give them passive income to help during these critical times. And if you want to know more, we do have our event coming up where we're going to talk about how you can use your SMSF to help you invest in property wisely so that at least in your retirement you can keep that lifestyle that you're accustomed to. So please take one, they're on the table here. Come along, invite people you know or maybe partners you know that might be interested in understanding more about how you can get ahead through property.